1 month ago, I interviewed Jay Pestrichelli of Yieldmax, and it was wild. What you are going to see now is Jay accepting my offer to come back in 30 days. I left the door open to him. We talked about NAV erosion, capital depletion, my feeling. Well, I'll go into that with Jay. I'm going to just have him on. Now, many of you subscribe to both of my channels, Oracle ETFs and Oracle High Yield. I'm about strategies, not spreadsheets. I am about doubling our portfolio as fast as possible. I love these funds, but there are flaws. Today, we will show my holdings. I added to my Ulti holding today. I'm going to have a lot of questions for Jay. We're going to talk about NAV erosion, capital depletion, and many other things. Get ready. This is going to be what you've all been waiting for. This is going to be such a great interview. I'm going to do it in a podcast style so that you can learn just by listening. Jay is a fabulous interview, and although I've been controversial, at times even aggressive, Jay has been fantastic. But don't think I'm going to take it easy today. Round 2 is about to begin.
Ladies and gentlemen, welcome to the main event. Let's get ready to rumble!
Everyone, here's Jay. Jay, welcome back, and thank you for coming back.
Hey, I'm glad to be here.
Yes.
You weren't sure I was going to come back. You gotta be honest.
I hit you pretty hard. I hit you pretty hard the first time, and a lot of people were in the comments. They were upset about the reverse splits, about many things that we talked about, the NAV erosion, capital depletion. But I want to start off with a fresh slate. We'll touch on those things. Okay, it's not going to be easy on you, but I'm not going to be rough. But I want to know.
I wouldn't expect any less.
First, I want to open up with the new funds, the Target 12 funds. These seem to be a combination of yield plus capital appreciation. Do you want to tell me a little bit about these?
Yeah, no, you're right. So the Target 12s, BIGY, we call it Biggie, and SOXY, we call it SOXY. Those two are more about, hey, get me a dividend, get me a healthy dividend, give me a healthy distribution, but I want growth. And so by defining kind of the dividend, we're going to give ourselves the ability to capture more upside. So whether we're, selling calls farther out of the money or using call spreads, the fund is designed in an up market to capture more of the growth on the upside. And then, still have a distribution that is on par with what I'll call a lot of the original covered calls were, like the JEPIs and QILDs of the world. We should be able to put out a dividend that, is competitive with them, but still capture growth. We think through our option trading and our frequency, we should be able to do that.
That sounds interesting. It sounds like a happy medium. I don't really know. Like for me, that's not something I'd come to Yieldmax for. We come to Yieldmax for yield.
Not max. Yeah, you come for yield, but look, it's one of those things that we heard from the community, not just you, from others. That's like, look, I don't need to make 50%, and you hit the NAV. Why don't you just go for something that's got more growth? So this way, we think we can define that, communicate that we're going to define it. It's why it's in the name, which was not easy to get done. Mm-hmm. And then that's it. So hopefully the goal is more upside with a targeted income growth.
I think, well, first of all, a lot of people want to know, I think I know the answer, is that going to be in YMAX eventually? Yes, right?
Oh.
No.
Actually, no, it actually won't. So YMAX, I think, is limited to like the single stock covered call ETFs. And so I will check. So it's either limited to bullish, which if that's the case, these are bullish holdings. Yes. But if it's single stock, then no. Then it's kind of like why YMAG isn't in YMAX, right? Yeah. We have some other funds that are coming out that aren't going to be included in YMAX, like the Dorsey Wright funds. I think you've probably seen a little bit about that. So I should probably know that answer. We're not the portfolio manager for YMAX, so I'll that's more title, but that's okay. I do think the answer is no, it won't be in there. You want that separately? You can add that separately.
So, it's funny. I recently invested in the Yieldmax garbage pail. That's what I call YMAX.
I know, but you're finally figuring it out, right?
You know why I figured it out? I'll tell you why. because it's a combination. It's the dividend freak off. It's the Yieldmax freak off index. It's the only thing like it because you're going to constantly introduce new funds that are that will appeal to retail. Okay.
Sure.
Yeah,
always.
that's the goal. Keep introducing new funds that appeal to retail. So they're all going to get thrown in there. My personal belief is that your funds, people who are looking for a buy and hold type of fund cannot be in a single covered call fund. Okay? Overall, for long, this is my opinion, because there's going to be an event, there's going to be something that cripples the fund, and let's say the fund and the stock are side by side. The stock can get up, the fund can struggle to come up. Then the stock can be crippled again, the fund gets knocked down again really hard. The stock gets back up because of the covered call nature, the ETF cannot recover. And over time, there starts to be this disparity. And like Tesla, where it's way too volatile and it destroys the ETF.
Yeah, I mean, we're trying, some of that gets addressed with the spreads we're using now, and that's definitely made an impact to the plus. But you're not wrong about, the buy and hold piece. Look at SMCI and SMCY, right?
Right.
Like, that was out of the blue. I don't think we could have launched that fund at a worse time. And the stock gets cut by 60%. So the fund goes down by 60%. So just like any option strategy, and any ETF trading that you're doing, paying attention to what you own is important. I get it. I'm a big believer of, hey, buy the SPY and let it go. That's fine for a lot of investors. But that's the Yieldmax ETFs are not that kind of an ETF. They are option strategies. You have to understand the dynamics. So you're not wrong about that at all. You want to pay attention to the dynamics of these ETFs and understand what you hold, which is, like you just said, understand the dynamics of a covered call.
So again, we come back to be a winner, okay? Well, to be a winner, we should sit in your seat. But for us to be winners, okay?
Hey, according to you, you're winning on everything. I love it. I love seeing your
that's
portfolio.
what I do. Oh, I'll pull my stuff up. Don't worry. I went heavier into Alti today because you almost recovered. As a matter of fact, let me just finish. So on YMAX, the garbage pail, what I like is that there's going to be winners in there, momentum players, and that's like a piece of everything. It's its own unique index. And it looks to me like you kind of slowed the erosion a little bit. I don't know. A lot of people think this and they're saying it, okay, because maybe it's because they're not realizing it because it's weekly. But I think because of the nature of the way Yieldmax puts out funds, okay, and I think it can overcome the decay by having runners thrown into that freak index. Does that make sense? It's kind
of like why investing in an index can work over the long term versus an individual
But your
stock,
index,
right?
your freak index.
Yeah, no, this is it, right? So there's regular rebalancing, you're reconstituting it with new players in it. So you're right? As you are continuing to grow this, it's being managed. I think I've seen some comments, I've heard questions, hey, why does it cost more than the other funds? There's actually costs and management associated with YMAX. We don't just hold those funds. There's tax loss harvesting that goes on there. That's a boring topic. We can talk about it if you want to. But there's things that happen in that fund. One of those things is the regular rebalance, where you're buying on the dips, you have your runners that can run and pull the whole thing up. It's why NVIDIA, when it pulls up the S&P so much, it's such a big deal because it continues to grow. So it's interesting that I'm glad, by the way, I should say that you understand the value there. It's, if you've heard my other interviews, it's the one I say is more of an advisor, professional kind of product, because you can hold it and get the higher distributions than most stuff out there and let it do its thing. And it's naturally going to reduce your volatility because it's diversified. So you take less risk. That's where that NAV erosion piece comes in.
And I might seem like I'm cutting you off sometimes, but I know you have limited time, and I'm going to squeeze you like a lemon. I'm going to squeeze your head and get everything out. Okay.
All right.
So, oh wow, I just lost my train of thought. I can't believe. Let me share my screen with you. All right, we're going to have Jay up in the corner over here, okay, on the upper right-hand side there. And I have a lot to show you. I feel that Alti almost recovered, okay? When I look at my notes here, we look at, this was pre-dividend last time, okay? Ex-dividend, we went to $9.78, okay? And it was actually $9 and well, wait. What matters to me is this: $10.68. Because when we look now, okay, we're at $10.11. Unfortunately, today the market was brutalized. Okay, we were on the way in the pre-market. I seen Alti at $10.30. We were 32 cents away. Okay, when I talked to you last, now I'm a big believer in Alti. My money's where my mouth is. I bought more today. Okay, I thought maybe because you were on this holiday world tour and you were going to dance around, people were going to wash your feet in Cambodia, all kinds of things are going to happen, and you got interviews set up and everything. I'm like, let me load up on the Alti. So I was profitable because I bought an ex-dividend last month. Okay, I want to hold the dividend this month. I have 34,000 shares of the ugly girl. I didn't mean to bring up Defiance, okay? But I have 30. Look at his face.
Yeah.
All right. So let me make this bigger. So I want to collect the dividend. I just totally lost you. I want to collect the dividend, but I don't want to be in a position where I never recover the dividend. So last time you told me, right? Last time you told me I had to reinvest the whole. You were going to give me the dividend. I was going to give it back to you to stay capital flat.
I misunderstood your question last time, and I in hindsight could have thought before I answered. But here's what I would say. So since we last spoke, Alti's up about 11%, 12%. We've had one distribution since the last time that we did our interview. We're going to announce another one, Wednesday morning is the next distribution announcement. So, look, we need appreciation in the portfolio. I think we had two names that had good earnings tonight, right? I think one of them was your favorite AI, and then the other, one of the Chinese stocks that we hold. So I do think you need some appreciation to get that back, right? We're earning our money, but vol's a little low. So what do I mean by that? So, right, our distribution is going to be based on how we're selling options, the income we're generating in options, right? And volatility's been low, which I think this, everybody knows this. When vol's low, you can't sell options for as much. The other thing, since the last time that
for a lower payment.
You are.
Look at your face.
Yeah, vol's low.
Oh my God, you're going to hit me with 76 cents.
What percentage is that?
It doesn't matter. I'm not Rod that retired on cross.
I know. I can't tell you the dividend yet. You gotta wait till
whisperer.
Wednesday. You don't want to run you don't want to keep track of all the trades on Alti? That's just like quite the.
I have it here. Right? Oh, no. Don't worry about it. Hold on. I have it right here, Jay. Okay, let me pull your face back up. You see that? You guys did, hold on, a whopping 47 trades today. Is that correct?
That's it. There you go. You got the right file.
So 47 trades. Okay, I looked at everything else here. You did more than anything else.
Now, you trade more in Alti than anything else.
Yes.
Yeah,
okay, and I even bought your Palantir, your Platy, whatever you want to call it. All right? I compared it to the stock and your covered call fund. And I'm like, I went for the dividend. I think because it's going to be a momentum runner, we can recover the dividend quickly. The more months I can recover a dividend, the better I can do. Hold on. People want to see your face because they love you. So you see all the trades here that you did? Right?
Yeah.
All right.
Sure.
Lululemon. Thank God for yoga pants, huh? I tell you, I don't know who invented yoga pants, but they're the most amazing thing. And women walk around in them like they're not naked. They're almost naked. Anyway. So
I'm not commenting on that.
Don't comment. Don't worry. I'm not talking about Rod. He loves to dress like a woman and sit in his car and make videos. But what I want to talk about is last time we did an interview before the presidential election bull run that occurred. Alti started going up. You went from because I put you on the spot. I was like, who does the trades? You're like, I do. I was like, oh, you wrote that book, right? And then, anyway, the book on options trading, up until recently, Alti did terrible. Okay, you would just lose all your capital, and it would be a terrible experience. Okay, and that scarred many people. I think a reverse split may be off the table for now because of the community uprise. And you might want to address that. But
let's talk about that.
Before we do that, why did Alti start doing good after our interview? What was the change?
Yeah, so the main change was as you look in positions and you look at these trades, if you kind of expand one of those columns,
I'll pull them
you'll
up
see
for
we
you.
buy puts now, right? We buy put spreads where every one of those trades now is risk managed. What's that mean? It means we don't want to take those big hitters again. So look, the risk of a cover call strategy, you pointed this out multiple times, is you get all the downside and limited upside because you're selling calls and you're giving away some of the upside. Well, when you pick volatile stocks, like we were picking an Ulti, even if I was 50-50 on winners versus losers, and we were better than that, the big losers not having their risk managed ended up having the negative impact. So the change was now we add in risk managed positions like long puts. We're
Collars.
using a lot of collars. We use spreads. You see
Yep,
that
I see it.
now. So, but the challenge on that is there's a little cost, right? There's a cost. You can't buy insurance.
Yeah, but
on,
whoa,
when
JJ,
you
let's
lend
talk
for
about
free.
cost. Your
Yeah.
fee, and I gotta
No,
interrupt
no,
you
not
like that
that
because
fee.
it's my style. You
Yeah.
know, it makes it
Yeah.
fun for everybody. So what about cost? We talk about that. Your fee is 1.25. Okay, and I think you get an increase, a raise. You get a raise in February. Nobody reads anything, but I do. Okay, that there was some kind of like reduction,
Like a
or
waiver
something.
thing?
Yeah, a waiver. That's
Yeah.
a really nice way
I think
of
that's
doing
what we
it.
call it, a waiver.
Yeah,
A
it's
fee waiver.
beautiful. So you're going to
Yeah.
get a raise on this, okay? So I I wish you had
So-
some guy working for you that you could give him a bonus. You know, if he
Sure.
does better. I mean, but you're the guy trading. You want me to give you a bonus if you do better?
Look, the bonus is when we get the bonus when money comes into the fund because people believe in it. We lose our revenue when the money leaves. By the way, Zega doesn't make 125 bips. The cost of the fund though is more expensive. Look at this activity, right? Like there's costs associated with having people and research dedicated to doing this. Believe it or not, there's actual,
Do
I have a
you
guy
think
whose
you think
life
we
is
could
dedicated to this fund.
do you think that we can keep this fund somehow capital flat with the new prospectus? I don't care about ever going to $20 again, but if we stay around the $10 range, do you know this is the most unique and innovative fund? This is why I keep harping on this fund. It's the only one.
Of course, it's possible. It has the capability to make now,
So
especially
do
with the
it.
structure we're using. It has the ability to do that.
So do
It's
it.
not capped. Yeah, here's the things that have to make it happen. Right these are the criteria that we have to look
Another
at.
presidential
So one,
election? I can't do that.
It's yeah, okay. Good election. Yeah. So look, markets, it's a bullish strategy. It needs markets to go up. That helps. We've had some of that, of course. Volatility staying higher is better for this fund. We're not having that right now, right? VIX at 13, 14, that's low volatility comparatively. So that also makes it more difficult when we're not able to generate the income from selling options. So I think those are the components to think about here of what would help the fund to go up. And then, look, it's the way, if NAV is important, and I've heard you very clearly, NAV price is important. It's how we manage the distributions along with the NAV price is important. And then the last thing I'll say is the split. You guys were really vocal about making sure we don't split the funds because even if it doesn't matter right out of the gate, you feel like it has a negative impact over the longer run. We've heard you. We've heard the community say that. We have a ETF. I think last time when we talked about Murney, you want to talk about an ugly duckling. That underlying stock's been nasty for us. We haven't split it. It's trading at $5. So I think, we've heard the community. Unless we're being forced, I think, we probably hold off on splits. You never know, but we'll have to announce everything. But I think our actions have spoken on that one, where we have not reverse split any funds since the last time we spoke.
Okay, well, I feel that a big part of that, I think, was our last interview. I think that maybe somehow reverberated through the halls of Yieldmax and Zega that, hey, people don't like this. This is not what people want. And there would be a big an outlash against Yieldmax. People would just be upset now. And they were waiting for you to rip the Band-Aid off all at one time and wait till a bunch of funds went under 10. Okay.
Yeah.
And I'll tell you, I brought it to people's attention. I said, look, there are funds. I don't want to hear that we're going to be delisted. There are funds that are trading at $2 on Robinhood. Okay. And one of them is by title. Okay, so there are funds at like 98 cents, and you could even,
Sure.
you can't margin them at 98 cents, but you can trade them on Robinhood. So you can go way below that. Anyway, so we're glad you heard the community.
We heard you guys.
It makes a huge
There you
difference. Now, my other concern is this, okay? It's actively managed Ulti. We are in, let me pull up my screen again, okay? We are in a Bitcoin bull run. Okay, hold on. Where is my this is today. Okay. We dropped from $101,000 to 94,000. About 50% of Ulti is in crypto related assets. Okay, roughly. Last time I
Yeah,
looked.
it's a little less than that, but you're right. There's definitely exposure to crypto, no doubt about it, between MicroStrategy and Mara and Coin and a lot of the others. So there's some other smaller ones that are in there that have a tie and correlation to Bitcoin. No doubt about it.
So that, I mean, nothing runs forever. I've been in Bitcoin since it was 1,500 when it went to 10,000, okay, and then it dropped back, okay, to like 5,000. I mean, I've seen all of these runs. So you guys are prepared, okay, in case there's a major, to like get out of MicroStrategy and run.
Yeah, I mean, we have what? We got puts on at the 360 level, right? I'm just looking where MicroStrategy closed today. You got it there? It's closed at 373. Can't go down much more. We don't have much more risk in that position right now. We're capped at 360.
Okay, in Ulti. In Ulti.
In the Ulti position, right, there's a long put at 360. That means we have the right to sell the stock that we have at 360. I don't care if it's trading at 300, 200. I've locked in 360 as the lowest I'll have to pay for this to get out of the stock.
Okay. All right. Because I know Michael Saylor's history. A lot of people just got into it this bull run, and they don't really know. When we hit $40,000 the first time, he almost bankrupted MicroStrategy. Okay, he had to step down as CEO. You can look this up, all right? He almost wiped out the whole company. He was buying the top, okay? And when it crashed, they were really in trouble. This time, they're in deeper. Anyway,
By the way, same thing with Coin, same thing with Mara, right? Coin, we got the 305s. It's trading at 310.
Mm-hmm.
So the hit that Ulti, I shouldn't say that, the decline that Ulti experienced today was like 1.25, something like that. Like that performance due to crypto is going to be muted. Like we've limited our exposure on those.
Okay. All right. I feel better.
And that's why I think we have the ability to rebound, because we don't want to experience the big losers like in the past, before we had the ability to hedge.
Okay, there are a lot of funds that pay less, and they actually grow their capital. Okay, and we touched on this a little bit, but what I was going to say is that I don't even know how to put this. It's
just say it. Like, it's not like you to hold back. Let's have it.
People love Ulti. I love Ulti. I think that Ulti can be your greatest fund. Okay, something that we can stay in as long as we can control it. Do you feel you have a handle on the NAV erosion?
It's a bullish strategy. So the answer is, I feel we're managing the risk.
Mm-hmm.
So I'm going to say yes. We're managing the risk. That's how we're doing it, by like what we just talked about a minute ago. But it's still a bullish strategy. The market needs to go up for Ulti to appreciate in a material way.
Okay.
And we're in a bull run, so there you go. So it should continue to go up. We get a 2022 and the market's down 25%. Ulti is going to have volatile stocks. We'll max out those puts. The Ulti will underperform the market if you get a year like 2022. So be prepared for that.
Of course, everything will. Nothing will survive. Yeah. Okay. Yeah. Anyway, what else do you want to add? I mean, the only thing, before I shut up, let me tell you one other thing. Okay. People are asking about Yieldmax, and they're saying, oh, the bad funds will be dropped out. Look, I know the mechanics of how this works. For you to be profitable in an ETF, you need to be doing around 30 million, roughly. Okay? Anything, $1 billion you see retire on dividends, aka the penis whisperer. You see him all excited about your AUM. Oh, $1 billion here, we got a bill there. Yeah, that's great for you guys. But people think that, oh, the bad funds will be dropped out of Ulti. I mean, out of YMAX. I don't think that's going to be the case because the only way for a fund to be dropped out of YMAX is if you discontinue the fund. Is that correct?
Yeah, with some minor changes, but you're 100% right. If there's a single stock yield max, bullish yield max out there, it's gonna stay in YMAX. It'll stay in there. We did some adjustments because we weren't sure what was going to happen with SMCY. Like if they were going to get delisted off the Nasdaq, we weren't going to be able to trade it. So in those scenarios, we might not have shut down the fund in time, but we don't want to add it to YMAX. So there's some, exceptions to the rule, but the general rule is if it's out there, if we have a fund that's, a single stock bullish exposure, I keep saying that because I don't want you to think the shorts are going to be in there, but you know what I mean by this.
Right.
Yeah, it's going to be included in YMAX. So do we shut down like a Disney or an Exxon? Maybe, and then that's how it gets out of the YMAX. But you're right, we'd exit those, and those are, break even ish, right? I don't think they're all that profitable for us yet, but they're not killing us, right? We're not, losing hundreds of thousands a year on those kinds of funds, and we don't have to get into all the economics on this, but quite frankly, they're going to be in there, and there's something to be said about a little bit of the diversification that you get from those. But would I prefer that we're not adding more MRNY to YMAX? Yep, that stock is a falling knife. I wish we didn't have to keep it in there, but it's still in there, right? We don't have the discretion, according to the prospectus, to take it out. Now, can we file to change that? Yep. Wouldn't be the first time we change the prospectus. But for now, they're all in there.
Are there any other prospectus changes on any of the single covered call funds or any of the funds that you can tell us about?
We recently filed for YBIT, a change in that one. So if that is our Bitcoin covered call strategy. Mm-hmm. We were using BITO as the underlying. As soon as IBIT, the iShares ETF, offered options on a weekly basis, we started moving to those. Unfortunately, we exceeded the firm limit in this first day of trading that one. The OCC, mm-hmm. the Options Clearing Corps, and the exchanges have a limitation on the number of contracts you can have there. So we had to change the tactics. So instead of doing a synthetic where we have the treasuries paying for the puts, that fund build that we use in single stocks, we moved to being able to use deep in the money calls as the synthetic. Which cut the contract count in half. So little changes like that we're always doing. Structurally, though, we have the ability to trade any Bitcoin-based ETF. We just like the liquidity of IBIT, and we like the fact that it's not hampered and challenged with that really large dividend that BITO pays. So I'm not sure if we were the first to adopt IBIT in the portfolio. I know there's other competitors out there with covered call ETFs on Bitcoin stuff, but I think we're being smart about addressing the better underlying and the less challenging product. But an IBIT has outperformed BITO since it's been live, so we like that as an underlying better. So little changes like that.
How do you feel about, and again, this is all off the top of my head, nothing's written down, and we didn't have a whole big preamble. How do you feel about these YouTubers that every day they armchair warrior your trades, and they say, oh, I don't know why you wasted the covered call spread on this, and why you're using covered call spreads on Amazon, and this, that, and the other. How do you guys feel about that? Are you there like these clowns? This is ridiculous.
That's okay. Look, it's I never second guess one of my traders that puts a trade on that follows the rules that we define. I communicate all the rules to this community and other communities, right? We tell you, hey, we're shooting for income that matches the implied volatility. I'm not looking at a chart. I'm not using technical analysis. We're not, trying to guess.
You're not using ChatGPT again, are you?
No, we used it to screen for news we didn't find. I know you love that. I use that one. I see that pop up in comments all the time. Thanks. I know. I'm following you.
And then
I would say,
go ahead. You asked me for Shadow. She's like, I don't want to work for Jay. I know.
No, you're keeping her all to yourself.
I know.
Help me get a better AI here. It's fine. No, so to answer your question, look, I never even second guess my traders. Like, why'd you trade at that time? They follow the rules, they pull the trigger, it's fine. I actually feel it's worse when you don't pull the trigger on a trade when you should have, right? If at the time all the data said pull the trigger, you don't know what the future is going to be. So I don't second guess the guys that are doing their job. they're doing a great job now. You can see all the extra activity and the additional upside that we're capturing. I'm happy with that. If people want to armchair that, great. And you know this trading is hindsight is 2020 on trading. Show me your losers. That's how I judge a good trader, not your winners. Everybody's got great winners. Everybody.
Of course,
I
of
don't
course.
know. I don't mind. It's okay. I'm glad they're watching. How's that sound?
Well, your competition is watching too, okay? And let me give them a slap, okay, to Curve. Okay, Curve has a different strategy. They
Yep.
actually capital appreciate, but they pay less than you. Okay, they crush you on Google. Okay, they actually pay the same thing and have capital appreciation. But, I made a suggestion to them that they could be your competition. They already have single stock funds, and all they got to do is stagger the payouts and make them weekly. What you did was genius. Okay, I emailed them. I told them that. I said, hey, this is free, right? They ignored it. So you have no competition. Round Hill, nobody can take a momentum. I don't care how much momentum it has. The more frequent you pay, the more NAV erosion you get, because the underlier on a single stock cannot keep up, okay, with frequent payments. So you had to stagger them. You can't make an Amazon that literally pays every week, or a Misty or anything that pays every week. So Round Hill has to come out with like 5 funds at one time to create a weekly game. And Curve, that's why they have no volume. They don't want to listen. You guys listen to the people, and I mean, your coming back here was great. I'm really excited. I had let me tell you, I'm an accredited investor. I've been doing this for a long time. I had a misconception when I got in, and I think it's the way even YouTubers present your products to the people. Okay, I had and maybe we need regulatory change. How many years has it been since the SEC, it's been recent, has allowed these covered call funds to retail?
Yeah, I mean, in the structure that we're using today, it's really only been, 4 years since
Okay.
it's 4 or 5 years, right? You couldn't do these funds before 2019. You could do them as the index, like the QILDs and the JEPIs have been around for a long time. You could do them that way, but it took regulatory change to allow single stock type funds to kind of do what we're doing today.
Okay, so, up until that, dividends have been paid quarterly. And for a stock to recover its dividend, it had plenty of time. No big deal.
Sure.
And the whole ex-dividend thing, okay, I think for your type of funds, it'll probably never happen, but there needs to be new regulation. There needs to be a way to get around the ex-dividend. Can you imagine if there was a way that they didn't have to go ex-dividend? Let's say you have a $100,000 deposit with Yieldmax, okay, and every month you got paid a $5,000 or $3,000 dividend. Imagine if it was just added to your balance in a way. It didn't have to go ex-dividend. The ex-dividend is so people can't cheat the system. So,
That's right.
So, I mean, if there was a way to avoid people cheating the system, but your funds can just pay out what they earn without taking it from the NAV, that would change the game. But that would be a regulatory thing. Don't you? Do you see how I'm looking at it?
Yeah, I see how you're looking at it. I don't know how it would happen, right? Because what's happening with the dividends, we're taking assets from the fund and paying it out to the holders. So you can't have it here and here at the same time. Like, maybe it's a way that the pricing goes. Maybe it's the way, if you know the way bonds, mark, and they, treasuries, pay every 6 months. That's obviously not interesting here, but you could get the market quote, or you can get what they call the dirty quote, which includes the interest, right? But it trades at a market level, so that maybe there's a way to adopt something like that, but it's probably somebody much smarter than me to figure out a way to do it. That would certainly be interesting, I think, to figure out a way to have the mark, the NAV, stay where it's going to stay, and then have the dividend payouts like a bond does.
It would be amazing. It would be amazing because I'll tell you, when I got in, I was misled. I didn't know that. I went all in on AMZ. I was super excited. I was like, oh, this is so easy, right? And I didn't realize that AMZ had to recover from the dividend for me to truly earn it. People don't see that. Okay, in order for you to truly earn a dividend where you can withdraw that money and live on it and it not affect your capital, you have to have no capital erosion. So the whole way I think to use these Yieldmax funds is, and you don't care if I use them like a Stacy. A Stacy is a slut, in case you didn't know. Every girl I've ever known been Stacy's been a slut. So we come in, we use them, okay, like
Stacey.
you see, you remember, smell your finger.
Yeah.
Anyway, so I'll tell you, I sold my Misty at $45 because right before you gave out the dividend. I sold it at 45.
I heard you do it.
I made like $29,000 in capital gains, and thank God I did it, because now I would have been underwater, because it's still around $33. It was market circumstance in coincidence with ex-dividend date.
Yeah, you made a market call, and it happened to line up really well against that ex-div. So, look, I think you and I are going to differ on this. I know we have before. I know you continue to say it, but I gotta bring this up. I know you don't like talking about what the total return of the fund is, but let's face it, it's the way you measure how well the performance is doing. It levels the playing field across the board. And I know that's not interesting when you, in the way you just positioned, it's like, hey, I want to take the dividend and I want to live off that, or I want to spend it and I don't want the NAV to decline. And that's fine. You could go with a fund that pays a little less. Maybe those, the biggies and the Soxies end up being the solution there, where it's going to be a more stable NAV and the ex-div isn't going to hit the price as hard. But, ultimately, I don't care who's got more running yards or passing yards or who broke a record. It's who's winning the game. It's the scoreboard that counts ultimately. And I know that your community and you have stressed that that's not most important to you, but it's the way the rest of Wall Street looks at which is
an old paradigm.
Fund.
Let me tell you how we look at it. Okay, we look at it that's the old paradigm. That's the old way of looking at it. Okay, we do not want to give up our capital. Nobody ever said that we had to accept capital erosion or capital loss in order to earn income. We decided that we would give up growth, okay, but not our capital. And when we look at, let me just pull this up, okay, we'll do a side-by-side here. Hold on, let me see.
Yeah.
All right, this was your biggie. That's great. Okay, Yieldmax, we love Alti. Okay, come over here. Palantir, I love Palantir. I chose you over the stock, Jay. Okay, but to get that Diddy oil ready, okay, for Planty, Platy, whatever you call it.
Didn't have the best day today. Interesting chart on that one, too.
All right, so let's look at this, right? So we look at Curve, we look at their max, right? I invest in Google, all right? Look at this, all right? My capital should be my capital. Do you know that these guys, let's look at yours, okay? Look at that. If I fell off my yacht, okay, let's say me and you were out off Palm Beach, okay, and you fall off my AB 100, okay, and we find you 5 years later. This is detrimental. This is better. And you're still getting dividends. So you want to talk about total return. Let me pull you up again. I didn't want to bring this up.
Yeah, Google's a tough one for us. There's no doubt.
No. I want to talk about total return. Wait, I want
total, right? So compared to what's this?
Wait, we froze. The screen froze. Hold on.
And the chart looks better. I got you. But you got to pull money out of the fund. You ended up getting more dividends, didn't you?
Wait a minute. I want to talk about total return. Our internet's a little unstable. Let me close some windows. All right. So, hold on.
Oh, yeah. Fine.
All right.
Yeah.
So we were talking about total return. Okay. I judge total return differently. I look at what I just showed you with GUI and Goop. I look at, first of all, I look at total return almost like an excuse for poor performance of the fund.
But why?
Let me tell you why.
The game.
No, let me tell you why. Okay, I'm invested in something like Google. Okay, the dividends are a reward. That's what I get for investing. That's extra. So right off the bat, if GUI and Goop, okay, one of them is going up in capital and the other one is eroding, the dividends are my reward. That's separate. Don't even bring that into the conversation. The fund is not doing as well. I do fully understand what it means by total return. Yes, you add the dividends back in, but no, the dividends are mine. That don't count. It should be
Yeah, look,
return of the fund and then return with dividends.
I'm gonna do I'm gonna cut you off. Come on, man, grow up. It's the way that returns are looked. All due respect, and look, I will even admit, the total return of the curve version of Google versus ours, I think has outperformed. I think it's done better. But there's others I could point to where it's the other way around. Both of those funds are still going to have the interesting dynamic of full downside, give up some of the upside. If you're saying I want the reward for owning the stock, it's not what Yieldmax is based off of. I should pick a different target than on what we're selling premium for, right? Even if Google in this period of time is up 30%, right? If I sell for more than 30% of income and I distribute more than 30%, it's going to have to net be down. I've given you back more than we've made. So in that scenario, I agree with you. That explains why the NAV goes down. But really, the reward for giving up the upside is what you're getting back in cash from us. It's not about a reward of the performance. That's a different strategy. By the way, not a strategy we're ignorant to that people want, but right now what's live is one more about just harvesting the volatility out of the stock. That's our criteria. What you're asking for is for us to change the criteria, and that's fine. It's okay. It's just a different set of rules.
It's how I look at
that govern it.
I'm changing people's minds about how they look at it. The dividend.
Well, it's important you educate them, right? I know you're trying to teach them, and I get it at the core. But you can't tell people to ignore total returns.
I can teach them how to look at it my way. Anyway,
like I said, I knew we would disagree on it, but I just wanted to.
I wasn't even going to bring that up. That's like you stuck a thorn in my side.
I was waiting for you to bring it up. I had to do it.
So let's come all the way back around to my question from the last conversation that made me use the F word and that you answered inappropriately. I asked you, I have I think 35,000 shares of OTI. You said you're going to pay me 78 cents this month. Right, we extracted that from the conversation. I
didn't say that.
Oh, it's my prediction. Okay, I'm like retire on dividends now. I'm making predictions. Yeah. All right, so 78 cents. I'll accept that. That's all right. Maybe 81 cents in that area is cool. So I'm going to get about $33,000. Maybe let's call it 30,000. I'm going to take the dividend. Misty, I skipped out on the dividend. Thank God I did. I'm going to trust you with this one. I'm going to take the dividend. How much of the dividend do I have to reinvest to stay capital flat? Last time you
put
told
it all
me
back in.
100%.
I'm kidding. Look, I mean, so which your question is, hey, long term, how much do I have to keep my balance, stable?
Yeah.
And that balance, that's going to pay me a regular dividend, right? Because ultimately, we're paying on a percentage of your ulti holdings, right? Yeah. So I think the way I would look at it is, you'll look at what we paid versus what the fund made, and that should help you out. So let's just say we made 12% since the last distribution. I think we made a little more, just how much it's moved around.
No, Jay, I just want to know. We're simple. We're stupid people. We're not smart like retard on dividends.
I know, but I can't answer that because it's different for everybody.
How much do I have to reinvest to stay flat? We recovered.
Well, I'm trying to help you get a number on that, right? Just the difference between the return and the distribution, right? So we give you 10. Or you make 10, let's say we pay you out, you're thinking we're going to pay you 7. So if we pay you 7%, you put the 3 back, and that's what you put the extra, and you took the dividend, and then you continue to have, that kind of growth or stability in the NAV. If you want to put it back, I don't think you want to put any back in.
I don't want to give you
listening
nothing.
To you. Yeah. I know you don't want to.
No, I don't believe in reinvesting.
So if you want to maintain that balance, right, because your payment is based on really how much you own in the portfolio. I can't see your portfolio right now, but you said you had something like what?
Let me pull it up.
300,000, 30,000? What was your position?
Let's see. I should be able to share it with you. Can you see that? So I have 34,000 shares of Ulti. I've actually had a good month. I'm up 48,000 this month.
Yeah, you got a lot of Ulti, right?
Yeah.
So
And
Yeah.
I bought more
So-
today. I hope I don't get in trouble for that.
Not for me.
No, from the SEC, thinking that like I bought it because like I was going to talk to you and it would pump.
Oh, no. That's all right. It's fine. Who pumped a stock recently that got in a bunch of trouble? It's not you. So what you've already done it, and now you're talking about it. It's fine. You didn't do it before you bought it, right? So there you go. I mean, you didn't talk about it. So my point here is, if you want, you should look, just maintain the balance that you want the dividend to pay you out, right? Do the math on like, hey, if I think we're going to keep getting whatever you think we're going to get, 70 cents, 60 cents, 80 cents. As long as you want the next one to be at the same amount, if you're going to project what our payment is going to be, keep the balance there. So, I mean, again, it's like I said, it's custom to each person. But for me, it's always, I get if you want to take some out, but do you need to take 100% out in distributions? I think you've said no. You don't need to take that much out.
I don't need to take
You
any
said
of it
lower
out.
the distribution, Jay. Lower it.
No,
You said,
don't lower it. Jay, this is
Oh.
the point of the fund, is that it's a whore. Jay, it's a Stacy.
Okay, so if Stacy is going to pay out 100% a year, what does that mean we have to make per year without the fund going to zero? You got to make 100%. Not easy to make 100% a year on a regular basis.
Yes, but
Very, very few funds can do that.
yes, but you have a lot of freedom now with the prospectus. Now, let me ask you a question.
Sure.
A lot of people are saying about the prospectus change, give it time, this and that. Once the prospectus is changed, okay, it doesn't really take time, right? You could just immediately go out and
We
do your
started
thing.
changing right away.
Yes. So maybe that's why we had seen the change when we did our first interview. I noticed it started going up, and then it really took
It was
off.
just starting.
Yes.
Yeah.
All right, good. I think that's everything, Jay, unless there's anything you want
All
to
right.
talk about or add.
No, look, I appreciate you having me back. Thank you. And I appreciate, I think we hit on a lot of the questions that I saw in the comments before we started. So I appreciate the recognition of Yieldmax as a potential holding for you. I can appreciate that you see the changes we're making. And yeah, we're listening to the community. So I don't know the next time that I'll be back, if you'll have me, but I thought this was great. And so I'll say thank you.
Oh, and thank you as well. I mean, it was really nice, and you're welcome back anytime. I know you're going on the holiday feet washing tour. They're going to be washing your feet on all the other channels. You're going to love it. Okay. Oh, they're going to kiss your ass in
Sure.
Cambodia. Watch out for the Cambodian breast milk. Don't drink it. And the last thing I want to ask you is, so, I had a little relationship with Sylvia Jablonski. I never was involved in Defiance before, and I went in for some one-night stands. I got paid like $10,000 one night. So, I mean, did you call Sylvia and say, Sylvia, friggin' Oracle, he's on you now?
Sylvia and I are partnered on a couple other funds, as you know that. So look, I think Sylvia's in a hard spot on some of the stuff she has to explain. But look, she's great. She's a market pro. She's been in the business a long, long time.
Is she aware of my talking about her?
I'll ask her next time I talk to her.
Okay.
A couple weeks.
All right. Do you guys do you find me entertaining in the office? You're like, oh, fucking Oracle.
Yeah, I told you. I told you. I call you the shock jock of ETFs. I love it. I think, look, I appreciate the education and awareness, and I think you represent the way some people think about using our funds. And so, you're talking about it, and not everybody, looks to invest in our funds the way you do and the way your community does. But if we didn't have a channel like this to talk about it, people wouldn't know what to expect.
This was great, Jay.
So I think it's great.
This was
I think
great.
it's great.
Thank you so much. And everything that I ever say about you guys is always in jest. And if I'm being a dick, you could always or email me and say, Oracle, you're being a dick. Stop. Everyone, this was great. Tell me what you think in the comments. Jay's a good sport. Hold on. Oh my God, where'd the video go? Hang on one second. Ah!